Okay, so with the Houthi attacks escalating in the Red Sea and preventing that safe passage through the Suez Canal, container ships are now diverting to the southern tip of Africa through the Cape of Good Hope. You can see that on the map there. This detour is likely going to impact cargo ships having to sail longer routes. That's going to drive freight rates higher, delay the global supply chain. So I want to bring in someone who has their finger on the pulse of the global supply chain amidst this conflict in the Red Sea. The Freightos CEO, Zvi Schreiber, joins me now in a Fox Business exclusive. So good to see you. I want to start with what you're hearing from customers. What are their concerns? Of course, this is a very quickly evolving situation. What are you hearing from them right now?
Well, the main concern, Kelly, in a situation like this is delays. And with the delays, also reduced capacity, because if the ships are taking a longer route, that means they can do fewer trips per year.
Welcome back, traders. This is a brand new week for 2024 that we are heading into. A lot is going to be taking place this trading week. And as you can see in the video that I played for you, there's a lot of global tensions on a very important trading route that could affect the global supply chain. And as we can see, a lot of countries are getting involved to protect this primary route when it comes to the Middle East, because a lot of shipping containers really pass through this particular area, and with rebels attacking container ships, trying to take and seize them, it's making more of a difficult route to ship through, to chart through, and this is becoming more and more of a global issue, as many countries are in alignment to really protect this route. And there's other countries that are backing those rebels, the Houthi rebels that are trying to attack the containers, and it's looking pretty bad as tensions start to rack it up on the heat. And we at this point, we don't know where this is going to go. Things could escalate much further, but it's important as traders that we understand that there are geopolitical risks that could affect the US stock market. We trade the S&P 500 and the triple Qs. However, these companies are very reliant on global trade, because global trade affects the US companies' manufacturing process when it comes to fuel supply, energy. There's a lot of things that are intertwined with global trade that affect the US stock market. And when one thing gets interrupted, it could cause either inflation or delays in shipments that could affect sales and manufacturing. So there's a whole lot of things, a whole lot of variables that are going to affect the US stock markets, and we can already see this playing out with the past trading week on the news of this takeover of container ships. So without further ado, let's get right into it. Welcome to the Options Trader Lounge, where we talk about generating income and growing wealth within the US stock market using options. Thank you all for tuning in. We have a good one for you tonight, so get yourself a drink, sit back and relax. Let's get right into it. So as we can see, the triple Qs is very down. This close on December was around 410, and now we are down almost, we can see this is almost a 12-point drop on the triple Qs. That's almost to a 3 percentage point drop. On the S&P 500, we are getting similar reaction, because the top 500 companies are being affected by global trade. And as we know, there's a lot of events that are going to be turning up on economic news in the next few days, primarily CPI. And who knows, we might see inflation rates stick even higher, or even stick around to cause more of a issue in terms of inflation. But we can see the S&P 500 dropping down almost 7 points on the S&P 500. That's almost a 1.5% drop. The one sector that got wrecked was small caps. Small caps is down almost 3.56 percentage points. That's a 7% or 7-point drop on the IWM small caps. And then we have the Dow Jones. It's kind of unchanged in a way. It's down overall, but nothing like the other three. So we can see that this is definitely the past week that we've traded through. The first week of 2024 was definitely a down week. And we, in my opinion, I expect to see more downside. We do not have a buying signal just yet. In fact, if you look at the intraday trading action, if you look at the hourly chart, you can see that there's really a clear downtrend on the way down to primary support levels. If you look on the daily chart, you can see that the next level of support is probably going to be around this area here. If we're using moving averages, we can take this 50, which is all the way down by 458. But I think a clearer view of support would be if you were to look at the weekly chart. So the next level of support, which was a prior resistance point, was 460 as it correlates back here in July of 2023 and then back in April of 2023. So we might be having to test this area before we see a move higher on the S&P 500. Now, if we're looking at the triple Qs, we're almost there in terms of the first level of support, which would be this 20 moving average, or this 15 moving average on the exponential moving averages, and we can see that this level closes right at 387, which correlates to the prior resistance point here back in July and also back here in November. Now, uh, we have to understand that the market will move in waves. Before it can make a move higher, we have to have some sort of reset, some sort of common ground before we can explode higher. But as of right now, we definitely see lowering momentum on the MACD. So right now we are still in a bearish standpoint. And what I mean by that, we are trading any pops. We're selling any pops to cover down below before we start buying the dip, right? So right now is not buying the dip. This is not where we would be buying the dip in this current downtrend. And again, we have this lowering momentum on the MACD on the weekly chart. And you could see it very clear on the daily chart. You see this fall off, this waterfall effect that we are seeing on this MACD on the daily chart on the S&P 500, similarly to the triple Qs, and you could definitely see it on the IWM and Dow Jones, a clear decline. So we need to find a level of support before we can actually move higher. And so that's why, as of right now, any pops that I'm seeing, I'm selling my call credit spreads to really just follow the trend. Because at this moment in time, that's the best thing that we can do. Now, there are things that we need to pay attention to. Um, this is something that I pulled up here. I wanted to really look up what are the types of goods that pass through the Red Sea, and one of them is fuel, which is energy, and then obviously you see all the little things like food, consumer goods. Everything's going to be really affected if this trading route gets shut down because now if these shipping containers really want to get across the world, they have to go the other way, which takes a lot more days, a lot more fuel, which would affect container prices, which would affect the goods at home in the United States. So if this area does not get resolved, we are going to be seeing higher prices for longer, and which means that we should be expecting higher rates for longer. And who knows if we get that news, that might be the point where things are being totally scrambled up with the Fed's idea of cutting the rates for 2023. Now, I'm not saying that's going to be the case, but that is always an opportunity that the Fed can change his mind that cutting rates is not the time in 2023 or I'm sorry 2024, especially in the early half of 2024. So they might hold for longer, but we'll have to see. um, and we are going to get that decision very soon on the 31st of January. So that's at the very end of this month, but there are a couple events that we need to get through first. One of them being the CPI data, right? Core inflation. So that's going to be released on January 11th. That's a Thursday, so be prepared for that. That's going to be 5:30 Pacific Standard Time. And then we have all these other important data points, such as retail sales, which is going to be the month over month. So this will give us an idea of how the Christmas season was being played out if people are really spending. We get an idea of how people are spending. Is it really on goods? Is it more on services? Is it travel? So we're going to get a good idea on that. So that's going to be very interesting on the 17th of January. But another thing that we have in the mix of all of this is earnings. So earnings is going to start on January 12th. I believe January 12th, let's see, that is going to be this Friday. So the very end of the week, we're going to get the earnings report for JP Morgan. So be prepared of that. That's going to start the kickoff of earnings season. And then we're going to see financials and then tech of all the big, the magnificent seven names that are going to be reporting. So this is going to be very interesting because going forward, what we'd want to hear is their outlook. How do they see their operations going forward into 2024? This is a brand new year. We're going to get an idea of how they perform in the final quarter of 2023 and their outlook going forward. Because as we know, they might be expecting that the Fed will be cutting rates, and how is that going to affect their operations? That's going to be a good question to find out and to hear from them to see, their outlook on their operations and how they're going to move and pivot through these times. Especially with the war going on, how is that affecting their sales, their operations, their goods and services? All of those things are going to be important to be watching out for. So be prepared. This week is going to be very eventful. There's obviously the CPI, and then on Friday we have the JPM earnings reports. Now, lastly, what I want to go over is the VIX, the VI VIX, which is the volatility index. Now, on Friday, we've seen a sell-off with the VIX dropping 5%, with its Thursday close at 14, and then on Friday we dropped down below to 1335. So that is a big drop. However, don't be fooled by this because as we can see, we have this inching up slowly, gradually to the upside VIX momentum on the MACD. Now that was a mouthful of words, but we can see that we are clearly seeing lower highs, right? So lower highs and higher highs. So that's going to be very interesting. Where is volatility going to lead us to into 2024? I personally think that we are going to see a lot of volatility this year, especially knowing that we're in an election year. You know, things are going to be pretty wild, but um, and especially with the fact that there are wars going on around the world. We have the Ukraine war and the Israel war. The Ukraine war, which is a long going on war that's been dragging on and on and on, that really should just be ended by now. Um, the two sides really need to come to an agreement or some sort of peace truce deal. But as of right now, things are not looking that way, and we just have to see. Things have to play out, and as traders, we have to be prepared on both ends, on the long side and the short side. But as of right now, even though with this VIX dropping, that doesn't mean that we should rocket higher in the market. We have to see things play out. We have to see the data points come out and determine where the market takes and consumes those data points. And we'll have to see. Yeah, just enjoy this week. I hope you all a good trading week, and we will see you on the next one.